Good morning and welcome to the show on this Monday, the 2nd of May, 2022. Thank you for tuning in. Glad to have you guys here. I'm watching the problems in the system right now, and it's unbelievable. I'm watching what's happening over in Japan with the yen. I'm telling you guys, they're trying to ignore the fact that they've been maintaining these interest rates down near zero for all this time, and their currency is finding it's having real problems, serious problems. There's serious problems with the euro developing. The war over in Ukraine now is threatening to spill over into Moldova, area bordering Ukraine, and they got this arms depot there that's got 20 kilotons of high explosives there left over from the Cold War era. What we've got is we've got the dollar being supported by Fed action, and they're talking about a 50 basis point rate hike coming right up in the next few days. This is what's supporting this. The only thing supporting the dollar, it's the only pillars now, is the Fed's tightening schedule, and them wanting to do quantitative tightening. But they're doing it into weakness, into a recession, and this can't last. It's gonna the whole thing's gonna come crashing down, and interest rates expect very possibly a major spike in interest rates. The 40-year bond market party is coming to an end. Let's get in there and let's open up the charts and take a look at all this stuff that's going on. First thing we're going to take a look at is silver. This is volatility is causing this right now, and it's down 67 cents to 22.08 today. But this is threatening to fall below mining production cost right now. We're just about right at mine. Almost. We're getting down low enough. We're almost, because fuel prices went up so high. Everything's starting to come unhinged. The whole machine of the financial system is if it was a car right now going down the highway, you'd have cogs and pistons flying out onto the highway. You know you got a major problem. Maybe the transmission just broke. Okay? The car's still moving, yeah. But, I mean, it's we got major problems developing in the world's financial system right now. I mean, really fast. It's coming unglued, and the Fed is on this mad path to try to tighten. They're going to have to reverse on, and when they reverse on it, I mean, if they wait to reverse on it, everything's going to continue to fall apart. The equities are going to continue to fall. The bond market is going to start to continue its march upwards. That's going to go out of control pretty soon. That's going to spin out of control unless they do yield curve control. I just don't know what they're going to do. Things are starting to spin out of control. And they don't really have any answers. They don't really have the tools to stop this process of things spinning out of control, other than financialization that they've been doing for many years is coming to a culmination now, and there's no easy way out. The only way I can see out for them is to enter into hyperinflation, which is what's going to happen if they change direction in a significant way enough to stop a recession. And I'm talking about well, actually, what we're talking about here, guys, is not a recession. We're talking about a depression here. I know they don't like to use the word depression, but we're talking about a major depression if they don't turn around on this and start to pump money back into the system. You're going to see ways. I'm going to show you things that are happening right now that are shows signs of it spinning out of control right now. Just this price falling on silver today, 66 cents, just shows you things are a little bit out of control, because this does not meet up with supply and demand. You guys all know that silver's in short supply, yet the bottom's dropping out of the price. That's why the premiums are so high. This is all signs that the system is unstable right now. And war is just making things worse. What's going on right now is worse than what was happening at the peak of the COVID crisis, when they were locking the world down. Okay, 22.13 for silver. Let's take a look at gold today. I'm telling you guys, this is serious. What's going on? I'm taking a look at these markets this morning, and I'm seeing all these signs of instability. Very serious signs of instability. Look at this. $40 down on gold. You guys must be saying to yourselves, something ain't right here. And you're darn right there's something ain't right. Okay? When you consider that the whole financial system is like a Ponzi scheme, pyramid scheme, but the only fundamental behind the whole thing is gold and silver. That's a capstone on the pyramids, and all the other financial assets out there, and this is dropping, but they're going to hold? I don't think they are, especially like equities, when we got these bond rates going up like they are. Let's take a look now at, look at that, down $40 on gold. Let's take a look now at cryptocurrencies, and we're at 1733. Let me refresh the page. 1732, or is that 22? I think it's 22. Anyway, it's dropping. 38,500 for Bitcoin. 38,583 right now. Cryptocurrencies is actually holding pretty good considering what's going on out there. But see, this whole thing can change now. You're seeing gold and silver drop precipitously in the last few days. The whole thing can switch when the fear really comes. The fear really comes, and they realize that the whole system is so over-leveraged, and all these assets they think they have all have counterparty risk attached to them, and gold and silver don't. Real physical gold and silver. There could be a mad rush in the opposite direction. This thing is spinning out of control, and we could see a mad rush into gold and silver at any point when the fear really hits that this thing is falling apart. Well, I'm always a little bit ahead of the curve. The financial system's starting to fall apart. We're right on the precipice. And you know, they don't really see it sometimes until after it starts to happen. They have all this rhetoric going on, oh, everything's fine, everything's fine. And at the last minute they don't see it until it's actually happening. I see it ahead of time, and the whole mechanism of the financial system is so over leveraged right now. It's never been over leveraged like this. With Fugazi, you know, the stuff that's not really money, it's just like leverage floating out there in the system that can dry up in a heartbeat. And that's what creates fear and panic. Okay, we're going to move on to the Dow Jones right now. It just started up a few minutes ago. It's down 55 points. What is it down now? No, it's up 10. See, there's your volatility. 32,987 right now. I mean, it could be up 10 right now, and all of a sudden later this afternoon it might be down 700. Investors are just like, right now, they're just like, they're not level-headed. I mean, the whole thing is just like, it's like their hair's on fire. Today. Right now. So that's causing what they call volatility. But you know, the action can move to the downside so fast. I mean, sure, it's up 10 points right now, but it's 32,987. Let's take a look at crude oil right now, and it's down 3% on the day at 101.54 for crude. Let's take a look at the move index. Now, what you see over here in this whole year, this is a year's worth of move index. And we see the volatility entering in, late cycle, and we see it's actually shifting upwards, steadily up, trending upwards. It's now 128, and it's moving into an area now where it's actually dangerous for instability in the credit markets that can suddenly occur. Because this move index is your window into the credit markets. The higher it goes, the more unstable the credit markets could become suddenly. And this is another signal right here that things are not what they should be. Let's take a look now at bonds and rates. Now, what we're seeing here is we're seeing rising yields. We're looking at, well, it's pretty much right on 3% on the U.S. 10-year. It's 2.989, and it could peak 3% today. on the U.S. 10-year, and we're looking at the U.S. 30-year at 3.05. We see inversions between the 20 and 30. We also see an inversion between the 10 and the 7. Let's see. It looks like very close to an inversion between the 5 and the 3. I mean, you know, these inversions are signs of a coming recession. Very clear signs of a coming recession. Well, I'm calling it a recession. Actually, this is a depression that's coming. This is an out of control steamroller of a depression that they're only going to be able to stop because they've charted a course for modern monetary theory. They're going to have to continue with that course, and that means stimulating, not quantitative tightening, but quantitative easing. And they're going to have to switch back. And it's that switchback that's going to send us spiraling out of control into inflation. All the fiat currencies, this has been coming for a long time. And, you know, it's funny that it's like before it hits, you know, you see things like what we're seeing with gold prices falling, silver prices falling, cryptocurrencies falling. Just before it hits, and this thing hits and it turns everything around, it's going to be a whiplash. First one direction, then the other. It's what we call about a roller coaster. You know, you go down and then suddenly you go up. And that's what this is going to be. It's going to be a whiplash, and it's coming very, very quickly, this whiplash. It all is hinging on the central banks when they change monetary policy. And they will change monetary policy, but they're not going to do that until the markets start to force them to change monetary policy. But it can force them suddenly with a freeze up of the system or something like the 2008 event. That's where we're on the brink of right now. We're on the brink of something very similar to what happened in 2008, except probably bigger and more powerful. We are on the brink right now. There's no mistake about it. We are on the brink, cascading on the brink of something, I think, larger than 2008. Let's take a look at the dollar index at 103.49. And see, it's received a lot of support. First off, it's the best of the fiat currencies. Probably the most stable. And I mean, that's not saying much for fiat currencies. But it's at 103.49. And yeah, well, listen, guys. Have a great afternoon. And thank you for listening to my show. Remember to like and subscribe. And get your friends to like and subscribe. And hit that notification icon if you haven't already. And appreciate my viewers out there. And we'll catch you guys in the very next show. Bye-bye.